Combined Motor Holdings' full-year revenues increased by 13% to $8.2 billion. The company cited a drive to increase sales, which resulted in market share gains in both new and used cars. So we're joined now on the line by the company CEO, Jebb McIntosh. Hi, Jebb. What's your assessment of the results? 13% in an environment where the consumer is said to be recovering, but perhaps not as confident as it might be, as the consumer sector might be. So 13% looks good for you.
No, we were pleased about that, David, more particularly as we were quite badly affected. Well, some of our franchises were quite badly affected in the first half of the year by the tsunami in Japan, followed by the floods in Thailand, which had quite a big knock-on effect to certain products that we sell.
Perhaps just go into a bit more detail there. Did that mean that supplies didn't get through, so that you just didn't have vehicles to meet consumer demand? How did that work?
No, we were short of vehicles, particularly key products, which we could have sold more of. And you get to a stage where the break even, we're getting to break even, but the extra 10 or 15% we didn't have the product available.
Yeah.
Because of the supply shortage.
I was looking back at your previous results from about a year ago, and there you doubled pre-tax profit from the previous year. So obviously there was a big jump there, and you said that you'd been cost cutting in bad times to achieve that. And at the time you said the next year you would see steady continued growth. So have you exceeded your own expectations? And again, those costs that you cut back so well in 2010, has that paid dividends?
It has, and this year as well, our cost only grew by 6% versus a turnover increase of 13%. And our operating profit revenue is 2.6, which is slightly down because our top margin was down slightly. But it's ahead of our peers, which average out at 2.2%. The
point's also made that there were the boom years, 2004, 2005, when new cars were certainly very much in demand. Those cars need replacing now. Now, that would presumably be an effect that would last a couple of years for you.
Well, it has, because last year, for our financial year, the market was up, the new car market was up 13%. And this year we're expecting plus minus 6%. But that's coming off obviously a higher base. So we are positive about the year going forward.
What about the mix? Because not all dealers will have new and used cars. You've got both. So is it a question of at any given time there's always one of them that's more in demand? You've got you're kind of covered.
Well, I think most of the increase in the vehicle sales has been at the bottom end of the new vehicle sales from a pricing point of view, which has affected the used car market because the figures we have available in the 1 to 5 year old used cars, that market was down 8% last year.
So do you, when one's in, you lose from one, you gain from the other? Is that how it always works?
It does, and our used cars are normally slightly more profitable from a gross profit margin point of view. So losing on the used, you're actually losing a little bit more margin as well.
Interesting mix. It's interesting that your car hire business is 16% of the total, and corporate services 21%. What's corporate services? And I see retail motor, that's the standard motors, 58%. Yes. Again, that's another mix in your business.
Yes, the car hire side we were actually delighted with. We've established a brand, First Car Rental, which means we don't have to pay royalties to overseas principals. And we've now established a brand, and it had an excellent year, considering it came off the World Cup year, and we equaled those profits. So I'm very positive about the car side going forward.
Just looking at your share price, and I know that what you do affects the share price. You're not someone who works with the share price. What you does affects the share price. But you're on a PE of 9.7, which suggests the market is seeing value in your company. It also struck me that your market cap is down to 16 billion from 1.75 billion from 1.43 billion. So market cap is down, even though these results have been a great improvement. So value to be had.
I think there is value to be had, and these results have only just hit the market. So hopefully we will get a little bit of a move, David.
What about prospects in the year ahead? As I said earlier, we talk about the consumer being slowly recovering, getting more confident. Certainly overall new car sales have shown encouraging signs. What's your sense of where you're going to be in a year from now?
I think, David, all things being equal, we should have a positive year. So, we came out of a very difficult year a couple of years ago, as you mentioned. We've consolidated the situation, and we're now in a position to actually grow our bottom line as well.
Right, that was Jebb McIntosh, Chief Executive of Combined Motor Holdings, CMH, with their results.